Welcome to the Investor Agent Podcast. I'm Steve Seymour, your host, where we help transform the human mindset from scarcity and lack to abundance and wealth, one conversation at a time. Steve Seymour here with the Investors Agent Podcast. Today we have on Vincent Minieri. Vince, thanks for being on today.
Thanks for having me.
Yeah, man. So Vince and I go way back to real estate investor meetings, and Vince just ended up coming up to me after one of the meetings. We connected. I helped him out on a flip, and it was like 7 years later now.
Yeah, about that.
Vince and I are now partners on some deals, and Vince has done a lot with flipping and I don't want to say wholesaling, but rehabbing, flipping, now apartment buildings. So we're going to go into all that, but let's go back to the beginning. Vince, what got you into real estate in the first place? What had you even have any interest in this crazy world of real estate?
So at the very beginning, I've always wanted to flip a house. I was handy, fixed everything around the house with my dad. It was just something that I wanted to do. And really what got me into it was the numbers that I saw. I was renting a house with 3 other people. So we were each paying $500 a month. We were paying $2,000 a month in rent between the 4 of us. Figured out that if I bought the place, I only had to pay $1,500. So I came out of, it paying absolutely nothing.
So now the term's house hacking,
yes.
But you were doing this back before at least that term was out in the public.
Yep, exactly.
And it just came from a function of thinking I could get other people to pay for my house.
Yes.
That's how a lot of people get into it. And it's a pretty cool strategy still to this day to get started in the rental game.
Yeah, and the power of that too, I bought it probably one of the worst times right before the crash, and I sold it probably one of the worst times before the market really just started to take off. But because I was the way I did it and structured it, I lived for free for 7 years, still was able to walk away with a profit because I fixed the place up while I lived there. And with the pay down that I had on the mortgage over those years, I still walked away from a profit, even buying it at the worst time and selling at the worst time. Nice.
And then why don't you talk about how you kind of got back in with the same concept of live and flip, making your primary an investment, because a lot of people look at their primary as a liability, which typically it is. You figured out house hacking could be a way to turn that into an investment, right? Where
yes.
Something takes money out of your pocket, it's a liability, puts money in your pocket, it's an investment. And then, your next step was really live and flips, correct?
Yes, correct. So at that point, I was, we did the first house hack for the first 7 years. And then we were at a point in our lives where we didn't want to have roommates anymore.
Yeah.
So we decided, and this is again before I knew what live and flip was, I looked at what the risks were on flipping a house. Because actually the first house I bought was right before the crash. And then I went to go buy the second investment property. And during that process of buying it, the crash happened. So I was able to walk away without purchasing that property, but that scared me off real estate for a long time. So about 2013, 14, I got back into it, and it was trying to figure out how to reduce the risk. So I looked at what the major risks were, and it was turning in the market, timing and schedule. Those were the 2 biggest ones, and working with contractors as well. So I figured if I bought the house, lived there, didn't really matter if the market turned because I needed a place to live anyway, would have been paying the mortgage. It wouldn't really be affecting me financially. And then if I lived in the house, timeline doesn't matter as much because I'm not really paying holding costs on it because I'd be paying that mortgage anyway. So that took that out. And then with the contractors, I figured if there's no timeline, I could do a lot of the work myself and then start to build that list of contractors. Hire a guy to do a small job, see if he shows up on time. Does he do good work? Does it end up being the price that he gave me? So that's how I built my contractor list, was that first live and flip. And then on top of that, you get, if you lived in the house for 2 years, the capital gains goes away when you go to sell that house.
Yeah, that's a lot of things you did to de-risk that deal based upon, your previous experience, and you saw how risky real estate can be. Even though it worked out on your first house hack, you took the initiative to say, let me figure out a way to de-risk this and still make it an investment. I know it's been a long time probably since you did that, but do you have any idea of what you bought it for, approximately what you put into it and what you sold it for?
So that one I bought for $225. I put in $150,000 to it, and then I sold it for $575.
Okay. So you walked away with some money.
Yes.
And essentially lived there rent free if you calculate out what you made back, right?
Yes. Yeah. Exactly.
And then you did a couple live-in flips, really.
Yes,
or live-in rent refi.
Yep, exactly. And I think the other powerhouse of that live-in flip is you could get the work done before those 2 years when you go to sell it. So now you just forced all that equity in the property, and I was able to refi out that money and start doing the quick flips on the side. Now that I had that contractor list set up, now I was able to get the capital out of the house that I was still living in and start to redeploy that funds while I was waiting for that 2-year mark before I could sell.
So it's like the velocity of money, like being able to get the money back out so you could do something else with it.
Yep.
Which greatly increases your return on your investment because now you took that equity out tax-free with a refi, redeployed it into something else. So that's a great strategy. Now, fast forward, you did the house hacking, live and flip, then you started doing a typical flip, right? And
yes.
You focused on higher end homes,
yep.
right? Do you mind sharing about some of the price points you were in and actually dive into some of the profits? Because I want to start with that, and then I want to go back to how did you get them?
So when I first started out flipping, I was, I guess, towards the lower end of the market. So my first quick flip, I would say, that I did, I bought for $160, put $60 into it, and then sold it for $325.
Still not a bad profit though.
No, I would say the smallest flip I did, bought it for $55, put $40 into it, and sold it for $155. That was the lowest price point. And then from there on, I started to go into a higher price point because I saw that it was the same amount of work. The numbers are bigger, the spreads are different. So I was drawn towards doing that higher end. And coming from a design background, there were more options for me to actually show my design skills as far as the low end stuff where you're just using, the cheapest materials that you can get because your out sale price is only $150.
So you figured out that you could not only have larger numbers and margins, but also you could create more value based upon your skill sets.
Correct. So the last one that we did, the out sale was 1.325.
And what did you pick that up for?
That one I picked up for $360,000.
That's a big difference. Now, how much did you put into it?
I did put $500,000 into it.
Okay, so that's a huge rehab, right? A
Yes.
lot of people are not used to taking on that type of project.
Yep, completely gutted down to the studs. It was a 1900s home. It was actually a duplex that we turned back into a single-family house. So we opened up the whole first floor, brought steel I-beams in to really open it up. So we did a lot of structural changes, foundation changes, things like that to really, bring that up to the class that all the surrounding homes were at.
And I'm assuming that's how you kind of felt comfortable doing it, is you felt that you couldn't over-improve in that neighborhood based upon what you were doing there? Because that would be the biggest concern, right? You buy a house for $360 or whatever, and you put $500 in it. Are you over-improving?
Yes, that neighborhood, was able to support that. Like for that one, I put in a $5,000 stove. I paid $3,500 for it, but I would not put that same stove in a lot of other flips I did.
Now, I know we're on air here, and a lot of people get uncomfortable talking about money, but I think it's important for people to hear these things because it's, sometimes can be life-changing. And I know for you, that was like one of your biggest profits as well.
Yes. So we walked away with about $425,000 from that one project.
Yeah. And I know it took was it like almost a year or?
That one was actually the longest because I actually purchased it with the intention to hold it as a duplex. But when I closed on the property, it was right before COVID. So once I closed on the property, it was owner occupied on one unit, and there was a tenant in the other unit that I knew wasn't paying. But when I purchased the property, my idea was just to go through the eviction process, get them out. But once COVID hit, they put on the eviction moratorium. So it took me a year to get them out. So I didn't even start the project for a year. And then when I did start that project, normally a project that size would take me about 6 months to complete. It took me almost a year to complete that one. And a lot of that was, supply chain issues. Like we were just sitting around waiting for the steel I-beam for 2.5 months. There was a lot of just sitting around twiddling thumbs waiting for materials to come during that.
So has your experience been that everything goes as planned in this business?
No, not at all.
It's almost like everything that can go wrong will go wrong.
Yeah, exactly. But I think you got to, as things change, find those opportunities. So I was looking in the beginning to hold that as a duplex. But while I was sitting around waiting to get this guy out, I had a lot of agents calling me because there was not a lot of inventory out there at the time. And a lot of the agents know the quality of work that I do. So I was getting calls from agents asking me if I had anything coming up. And that's what actually gave me the idea to turn it back into a single family house, because it was originally a single family house that they turned into a duplex over the years.
And I think that's key, is like keeping your eyes open when a problem arises. Like step back, don't freak out. Yep. Typically problems create opportunities, whether it's a learning experience or whether it's a new shift in strategy. But that was great that you were able to pivot with that. And as much as COVID hurt you with the supply chain issues, it also probably drove up prices in that neighborhood.
Yep, exactly.
So that's, it kind of all worked out. But just like to talk about that, because I think when people are looking at investing in real estate, the deal, you could have a great deal and then you have a bad operator and it turns to a bad deal. Mm-hmm. You could have a so-so deal or a bad deal with someone that's creative and a good operator, and they figure out how to turn it into a good deal.
Yep.
So that's what I love about real estate is, you have so much influence on the value of your asset, where let's say in the stock market, you put something in, something goes south with the business. Yep. How are you going to influence that? You can't.
Yeah.
Right. Pretty cool. It's important to think about, because if you're one of those people that likes to take control of your finances and your money, it's nice to know that you have some level of influence over your investment, not just market conditions, and you're not just, put your money in, you're stuck. You could always add a bathroom, a bedroom, you could do an addition, you could take a duplex, turn it to a single, you could do the opposite if that was more valuable.
That was the first live and flip that we did. It was a duplex, and we turned it into, it was actually in that intermediary stage where the guy who owned it was turning it into a duplex, but didn't know what he was doing. So it sat on the market for so long because it wasn't a single family house, but it also wasn't a duplex. So finding those opportunities and then seeing what works best.
Yeah, and Vince has been able to deploy his creativity and design and background as well to, just maximize the functionality of the space as well. But I know this from working with him, seeing his projects and really thinking, oh, wow, he went outside of the box, but delivered a much better product than what someone on that big flip, what someone would have done with just keeping the same layout and, just doing cosmetics. All right, let's shift the topic now, because, Vince and I have recently clarified our goals. We're working together to buy apartment buildings in really a 75-mile radius from the Westchester area. And that's a function of wanting to have some level of, touch it, feel it, smell it, kind of control on a property. I know other investors wouldn't necessarily subscribe to that, and that's fine. It's just what we're comfortable with, what we've chosen. Yep. And I know for me why I'm interested in apartment buildings, but I want to hear it from you as to what you see in terms of the opportunity and why you believe the opportunity's there now.
Being an agent and being a house flipper, those are just jobs. The second I stop flipping houses, the second I stop being an agent, the money stops coming in. So with the apartment buildings, building that asset that could be passed down from generation to generation, and also the time into returns that you're getting. Renovating an 11-unit apartment building, which we're doing right now, is about the same amount of work as it is, renovating a single-family house. So what's your time worth? You get bigger returns on it. There's, different things that you have to take into account, but it's, for me, going from that agent to flipper, now looking at more of the buy and holds, is trying to create that financial freedom.
Yeah, and it's something that we preach around here a lot, but, to not just rely on the transactions and don't think singularly, think what's going to be duplicatable and replicatable, which you can build a business with sales where you have a team of people, but you have that kind of 4 quadrants. You have the employee, the self-employed, the business owner, and the investor. And as you look at the different options, I tend to look at investing as having the highest return on my time.
Yes.
Right. Where potentially a business could be if you're really good at scaling it quickly and you have a great product or service. But we know time-tested principles with real estate. If you look at it over time, people who've invested their money in real estate have tended to do really well. And then the whole concept with an apartment building is versus doing one at a time, we're doing, multiple, which is economies of scale. And then using leverage, why not go bigger? Because the returns will be better. So I think Vince and I align a lot on that principle. We encourage everyone that's interested in multifamily to explore it. Yep. And as a progression, a lot of people go from selling houses to wholesaling to flipping to single family rentals to small multis, duplexes, triplexes to multifamily. And what we're learning the more we get into this business is that it's actually better to go bigger than necessarily always think of that chronological growth. You can go exponential growth if you have the right people and teams, big proponent of other people's money and how we structure deals. So, Vince, you want to talk about just some of the ways that we're leveraging private capital with institutional money, putting them together?
Yeah. So if you're familiar with the BRRRR strategy, we're doing that on a larger scale. So we're looking to purchase assets where we could come in and do a value add. That value add will get us additional equity in the building. So our structure is really to find the deal, use regular financing through a bank, but use hard money and capital that we raise to compile that with the institutional financing. So most of the deals that we do, we try to come out of pocket either nothing or very little. And then this way we could propel ourselves and continually do it infinitely. And then once with that value add in forcing that equity that we're getting, we're able to refi the building, pay the private capital back, and then we could walk away with that building for free with equity in there, plus cash flow, plus appreciation, plus your tax benefits that you get from it.
Yeah, so it's really just figuring out ways to scale because, when you're only using your funds, you're very limited.
Yep.
And that's where a lot of investors get stuck. It's like that, even when you're talking about the velocity, when I said the velocity money, but you were saying how you did it with your primary, it's the same concept. It's like, well, if you had unlimited funds, how many could you do? Well, let's structure the deals so that we don't have unlimited funds now, but we don't need them because we can go out and we can source a deal that has enough equity that we can share in the profits with an investor, and then we can do it again and do it again.
Yep.
So that's something that, anyone that's obviously in the game, you guys are aware of that. But if you're not in the real estate game, that's a real thing where you can structure a deal and create equity with none of your own money.
Yep. And
it's really hard to grasp that concept if you're not in the space, but we're doing it. It's working. We're going to continue to do it. Yep. So we just, if anyone's looking to invest passively, you can reach out to us. We can give you ideas of how you could possibly do that. Or if you're looking to, kind of model a similar strategy, we're happy to help you in bouncing ideas around about, what's the best way to structure that.
Yep.
All right, Vince. So, the intention of this podcast is to transform the human mindset from scarcity and lack to abundance and wealth, which is something we have to deal with day in and day out because when you're swinging at bigger projects, there's going to be fear involved. Got to stay in that abundance mentality. What are some things that have helped you maintain that, whether it be people, courses, books, philosophy? What has helped you maintain that? Because I know we've all gone through these waves of that scarcity. I don't have enough. I can't afford it. Or I want to go get it. I want to make it happen. How can I make it happen?
I think it's a little bit of everything you just said, but if I had to pick one, it would be the people. So the people that you work with, but also the people that you surround yourself with. I always use the analogy, I was riding my bike on the same trail for about 10 years, and there was always this one obstacle that I couldn't get over. And I would always just ride up to it, wouldn't even attempt it, get off my bike and walk up it. And then one day I rode with somebody that was better than me and saw him just fly up it with ease. And then that day I turned around, went back and flew right up it. And since then I've, missed it here and there, but for the most part, it was, being around people that have done more than me, know more than me, and, aligning yourself with them, whether you're working with them or learning from them. I think the people in this business are really the gold mine.
Yeah, I would second that. And probably the most consistent answer that I've heard on this podcast is the people you surround yourself with. It must go back to when we learned to walk and talk. And, how did we mimic people?
Yep.
We didn't read a book. We didn't go to a seminar. We just watched the people around us.
Yep.
And maybe we're human and we're innately wired to learn from other people around us. So I think, in this day and age, when everyone's looking for this technology and the system online, there's something to be said to just being in the space and watching other people do it and seeing it, just like you saw that guy go over that hill or jump. Mm-hmm. It connected something in your brain where you could do it, where I don't think if you watched a video of that, it would have had that same experience. You had to be there for that to have that happen. You had to see it, watch it, right?
Yep,
experience it. We just had a trainer in today, and he was talking about a book. You can't teach a kid to ride a bike at a seminar.
Yep,
and exactly. I think that philosophy, that principle applies in this. So if you want to get in this space, reach out to us. We'd love to. We're looking to grow our network. There's ways that we could work together in terms of sourcing deals, capital. If you're project management, we're looking for contractors, but we are looking to help. You can earn as you learn type of deal. We're happy to help you guys. Reach out. And Vince, any closing words of wisdom, things you want to leave people with?
I would say just go out there and do it. A lot of people get that paralysis analysis or analysis paralysis, the other way around. And that comes into being around those people. Watch them do it and you see it. Getting into the bigger space, looking for, those 10 to 50 units around 75-mile radius of Westchester. I think if you're trying to get into it, you look for somebody that's doing it in the area that you want to be in and give them some value, right? Instead of asking for something in return or some knowledge, I think it's go meet the people that are doing it and try to help them out. And in turn, they'll help you, and it's a win-win situation for everybody.
Well said, my friend. Well, thank you for being on today. Appreciate it, Vince.
Thanks for having me.
Thank you for tuning in to the Investor Agent Podcast today. We hope you found it valuable. Please tune in weekly at theinvestoragents.com.